Hi, good morning and a warm welcome. Rose Jacobs for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. US shares were smashed on Tuesday as investors waited for businesses to report how rising prices have hit their latest earnings, while bond yields spiked on bets that monetary policy will soon be tightened given inflation pressures. MSCI's gauge of stocks across the globe shed 0.28%. Benchmark US indices closed lower on Tuesday, October 12, dragged down by blue-chip technology and healthcare stocks as investors trudged cautiously amid inflation concerns. The S&P 500 fell 0.24%, the Dow Jones fell 0.34%, the Nasdaq Composite fell 0.14%, and the small-cap Russell 2000 was up 0.61%. Traders remained cautious amid a volatile market. On Wednesday, big banks like JP Morgan Chase & Co. and Goldman Sachs will report their quarterly earnings. Markets have been grappling with a host of issues from raw material and labour shortages to coronavirus, although demand has been at its peak with the festival season around the corner. On Wednesday, the Federal Reserve is expected to release the minutes of its latest policy meeting, which will be of major interest to traders. Real estate and consumer discretionary stocks were the top gainers on S&P 500 index on Tuesday. Technology, communication and healthcare stocks were the bottom movers. 6 of the 11 major sectors of the index stayed in the green. Looking at the futures and commodities market, gold futures were up 0.26%, silver decreased by 0.45% per ounce, while copper fell 1.03%. Brent oil futures decreased by 0.43% per barrel, and WTI crude was up 0.05%. Moving on to the bond market, the 30-year Treasury bond yields were down 2.86%, while the 10-year bond yields declined 1.54%. US dollar futures index increased by 0.22%. And now it's time for a small break, but stay tuned as I'll be back with Europe, Asia and the Australia share market updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Welcome back, I'm Rose Jacobs and you are watching the Global Markets Roundup show. European shares slipped on Tuesday as investors feared that soaring prices would impact the corporate profit. The Pan-European Stocks 600 index was down 0.1%, hovering about 4% below its August peak. Worries about a fallout from China's struggling property sector also remained after Evergrande 3333 missed its third round of bond payments in 3 weeks. The London markets traded in a red zone amid ongoing worries regarding inflation. According to the recently available data from the Office for National Statistics, the UK unemployment rate had dropped to 4.5% for the 3 months period ending August 2021, as compared to 4.6% for the May-July 2021 period. German government bond yields rose above 0.1% for the first time since May, amid expectations of a possible change with the market. Okay, and moving on to the Asian markets, Japanese shares closed lower on Tuesday after a 3-session rally, tracking a weaker finish on Wall Street, and as big tech stocks sold off amid fears over higher US interest rates. The Nikkei share average fell 0.94%, while the broader Topix fell 0.7%. Chinese stocks closed lower on Tuesday, dragged down by coal and power-intensive sectors, while property firms rose after analysts pointed to possible policy easing to support the troubled sector. The blue chip CSI 300 index fell 1.1%, while the Shanghai Composite Index lost 1.3%. South Korean shares tumbled on Tuesday and the won hit its lowest in nearly 15 months as soaring oil prices stoked inflation worries. While the benchmark bond yield rose after the Bank of Korea signalled further tightening as early as November. The Kospi closed down 1.35% after having fallen as much as 1.85% earlier in the session. The country's financial markets were closed on Monday for a public holiday. And now lastly, some updates from back home. The Australian shares may rebound on Wednesday despite all major indices on Wall Street slipping into the red overnight. ASX 200 fell 0.25% points in the previous session on Tuesday. The domestic shares may rise, likely helped by gains in domestic gold stocks on the back of firm bullion prices. A few ASX listed companies would be paying their latest dividends to shareholders on Wednesday. BlueScope Steel, News Corporation and TPG Telecom are a few companies to pay dividends. In addition, Bank of Queensland will be announcing its financial results for financial year 2021. The Australian and New Zealand dollars were largely steady on Tuesday as sellers were held at bay by higher commodity prices, as well as on spiking bond yields driven by bets that major central banks will tighten policy to curb rising inflation. The Aussie Dollar was at 0.01% lower, near the three-week high it reached on Friday. Gold rose on Tuesday despite dollar strength. Spot gold added 0.3% an ounce. Meanwhile, with businesses hit by persistent supply chain disruptions and inflation pressures, the International Monetary Fund warned on Tuesday that the global economy's recovery from the COVID-19 pandemic is being constrained and cut growth outlooks for the United States and other major industrial powers. Well, that's all for now, but keep watching Kalkine TV for more market updates.